Hey all, welcome back. This is Raj here. Today I was not planning to do this video, but I couldn't resist coming back and looking at the camera and getting started with this particular edition. It all was inspired by the fact that I do not feel so bad about my red portfolio anymore after reading the news about billionaires who have lost a lot of money. Elon Musk fell off the top spot and lost close to $140 billion. That's, I think, almost 50% of his overall wealth. Bill Gates saw his wealth decline by 29 billion. And somewhere in between these two, we have Jeff Bezos with a loss of around $86 billion in his net worth. So I thought, well, let's take this opportunity to have a last look at this year's performance of stocks in our watch list and see how they have fared. It's going to be a high-level comparison of where they started, where they ended, some highlights during the year for each of those stocks. And at the end, I have a table in which I'm going to compare all of them with how ARK-G performed. I'm using ARK-G as a benchmark against which to compare our genomic stocks. So with that said, let's get started. Welcome back, friends. I would like to start with genomic sequencing companies. First off, let me start with PACB. PACB saw a high of around $21.5 at the start of this year, as you can see in this chart, and then it dropped 61.5% to close at 8.29 on 29th December 2022, which was yesterday. This year, they introduced a Revio and Osno sequencing system and started accepting orders around October. I suspect, as with most new model introduction, people suspend potential purchase or replacement so that they can get the latest model. This typically happens when you look at cars or computers or iPhone for that matter. You see this phenomenon where sales drops in the quarter that they announce a new model and later on picks up after the model orders are taken over. So I expect that PACB will improve going forward. This was also reflected in their Q3 performance. They also introduced a scientific advisory board to provide guidance and enable more comprehensive understanding of the opportunity in the omics sector. Omics means it's proteomics, genomics, everything. Next, let us look at its competitor, Illumina, which is one of the big boys in the genomic sequencing groups. Illumina dropped from a peak of $428.23 in January. It dropped almost 53% and touched 201.90 as of end of business hours in the last trading day. The brilliance of Illumina was overshadowed by their quest to take over Grail against all odds. Right now, both the EU and US antitrust action is bearing down on the company. Meanwhile, they announced and executed a 5% cut in their workforce to trim the fat and improve their operational efficiency. They also inked a collaboration with AstraZeneca to accelerate drug target discovery and launched their latest NovaSeq X genomic sequencers priced at $1.25 million. This particular genomic sequencer, NovaSeq X, is the most advanced in the industry, and it's almost 2.5 times more efficient than their predecessor, the NovaSeq 6000. These are two of the bigger names in the genomic sequencing segment, and the fact that their share price has struggled gives us an indication that the genomic sector has had a bad year. However, this year saw the whole human genome sequencing cost go down below 1,000 for the first time. Now on to our regular suspects, the genomic companies in our watch list. I've already spoken to you guys in detail about CRISPR and Beam Therapeutics, so I will not include them in this list for review today. I'll skip those two. There are separate videos on them that I have made recently, and they can be found on the channel homepage list of contents. I will start with Bluebird Bio, that has performed better than most of the others in our watch list. Starting the year at $10.68, Bluebird Bio went through many gut-wrenching movements. It was like a roller coaster movement for any Bluebird shareholder. At one point of time, it dropped as low as 2.89, only to get a really good news from the FDA that they have the green signal to monetize Zynteglo. And within a month after that, they got the green signal from FDA to monetize Skysona, as a result of which Bluebird only dropped 35% and closed at around $6.93 at the end of trading on 29th December 2022. And during this period of time, in order to improve their cash position, they sold one of the 2 priority review vouchers they had with FDA, and that fetched them around $102 million, and it's keeping them going. They still have one more priority review voucher to sell if required, and they have also lined up 27 patients who are being evaluated for paid treatment with Zynteglo. As of last news, they may have roped in a few more patients. We'll find out soon. But as of last reporting, there were 27 patients that were being financially assessed as well as medically assessed in order to get into a paid treatment with Zynteglo. And their collaboration with Real Endpoints Marketplace has helped them. And they've also come up with an innovative product pricing because the therapy is so expensive. And they have promised a 80% cashback if benefits of the therapy were to go away within 2 years from the date of treatment. Overall, I think this company did better than others in our watch list. Next, I would like to look at Editas. Editas fell 68% from a height of 27.48 at the start of the year to end at 8.98 at the close of business on 29th December 2022. May 2022 saw US Federal FDA granting orphan drug designation for EDIT 301 for the potential treatment of a blood disorder called beta thalassemia. Mid-June, they said that they have signed a strategic research collaboration and licensing deal to combine gamma-delta T-cell adaptive cell therapies and gene editing to develop medicines to treat cancer. This put the stock on a bull channel and helped it to recover more than half of its fall from its peak at the beginning of January. But by August, the good news bull run ran out of steam and steadily fell day by day to close at 8.99. Verve started the year at 40.03 but dropped 53% to end at 18.49 on 29 December 2022. One of the biggest misfortunes for Verve was the FDA hold on Verve 101. Among the 5 questions that FDA wants Verve to answer in order to lift this hold, I think the one that asks for germline edit related data is what concerns me most. I hope Verve has the data to prove that germline edits will not happen. I had read in one of the articles, I don't remember where, I remember reading that Verve has already confirmed that germline edits do not happen. And they had done this in primate models and mice models. They sequenced sperm samples from 6 sexually mature non-human primates before and after treatment with Verve 101 and confirmed that the samples showed no evidence of PCSK9 gene editing. They then sequenced the offspring of female mice treated with the murine surrogate of Verve 101 and they confirmed again that PCSK9 gene edit was not transmitted to the babies. The sample size for the mice experiment was around more than 400. However, I am concerned with how they will be able to convince FDA that in case of humans, we will not have a germline edit. Once this risk is resolved, I think Verve should pick up its price and start its move upwards. And I think they will be able to pull it off, but until that happens, I'm going to be a bit circumspect. That said, now let us look at Invitae. Invitae dropped around 89% from a peak of 15.97 in early January to close at 1.82 at end of trading on 29 December 2022. Nothing significant has happened for Invitae during this year apart from spectacular price fall. Again, Invitae is in a vanilla kind of environment, in my opinion. They do genetic testing, and there were no major surprises in the works. However, when we look at genomic companies with therapies in the pipeline, there is the potential of a strong price movement when FDA approval happens, and that does not seem to figure into Invitae because they're all into genetic testing. As the market sentiment improves, Invitae will improve. We should remember that food, clothing, medicine, etc. should do much better than other sectors during recession. However, I'm not sure if genetic testing has become so much commonplace or has become sufficiently staple in medicine in order to get the benefit of that kind of trend during recession. So we'll wait and watch what happens. We'll learn something new when recession does happen. Next, I would like to focus my attention on Ginkgo Bioworks, ticker symbol DNA. uh, DNA took only until mid-March to fall from a peak of $8.73 at the start of the year to $1.67 at the end of trading on 29th December. A spectacular fall of 81%. It consolidated in a range from March until October and then fell further in the last quarter. DNA has acquired companies aggressively, allocated generous number of stock options, and insider selling keeps the stock depressed, in my opinion. Over and above that, they came out with an equity offer of around 100 million in the last quarter. That was the last nail on the coffin. The company needs to consolidate its acquisition and announce improvements in operational efficiency and improvements in operating margin in order for any positive movement for the stock to happen. So that said, let's look at Intelia. Intelia disappointed with a drop of 70% from its opening high of 119.48 at the start of the year. This fall was consistent, and there was a trend reversal around mid-June, but the recovery was short-lived. By mid-November, Intelia had lost power and dropped back sharply to its all-time low for the year and ended at 35.28 at the close of trading on 29th December. Bulk of the drop, almost 28% from mid-November, came after the company announced public offering of 300 million worth of equity shares. Equity dilution has been the bane of most genomic stocks. Caribou Biosciences saw mixed reporting on positive data for its CB010 therapy, but that could not save it from losing 61% from its peak of 11.65 on the 4th of January to end at 6.05 on 29th of December 2022. Overall, I think this is a strong company and has excellent background. Now, let us look at ARK-G, which has got professional management and it has a focus on genomics. I'm going to use it as a benchmark. ARK-G fell 56% to end at 28.19 on 29th December 2022. So let's take a look at this table out here. Now let's look at this table out here. I've marked Bluebird in blue because not only because it's Bluebird, but also because it has the least drop in the 52-week period that we are looking at. So it started at 10.68 and ended 35% down. On the other hand, if you look at Invitae, it has dropped on 89%. And the common factor that you find here with Invitae and DNA is that they don't have all these pipeline items. Invitae is basically a vanilla gene testing company. And when it comes to DNA, it's in a field which is unique. And these two have suffered the biggest loss. Now, if you look at ARK-G, which I have put here in the center and I have marked it yellow, which is going to be our baseline for comparison, ARK-G fell down 56%. So only 3 companies have done better than this in our watch list, Bluebird, Illumina, and Verve. Again, Illumina is a powerhouse. It's got excellent products. And whenever I look at genomic sequencing companies, I see them as being in the intersection in a Venn diagram between all the other type of omic companies, because all of them need genomic sequencing machines, and Illumina and PSEB are in the center of that. So in a way, they are supposed to do better than the others. So I'm really happy that Illumina has done that, but PSEB has potential and it should have been on the upper side of the ARK-G continuum. But unfortunately, it is slightly below. Not very bad, but it has scope of improvement. And I would see a bounce back potentially in PSEB in the new year in order to recover whatever ground it has lost. But PSEB has been producing a lot of new hardware as well, and it's also continuously improving its technology. So that's what it looks like. And the companies which have suffered the most are Caribou, PSEB, Editas, Intelia, and DNA. If you work the other way around, Intelia is the worst performing, followed by Editas. And Caribou Biosciences has done pretty well overall, in my opinion, because they have a small pipeline, but they are more into platform. And I think right now they have changed their focus into coming up with therapies. So let's hope for the best from Caribou. It's down minus 61.0%. And overall, my friends, if I had not seen Elon Musk losing so much money and Bill Gates losing so much money and Jeff Bezos losing so much money, all these numbers would definitely depress me. So I have this natural defense for my own mental health, where I look at the misfortunes of others and count myself more fortunate. So that's how I'm able to have a look at this. This was a very unpopular subject for me for now. But we still need to look at all this because we have put our hard-earned money into this. I must confess that my genomic portfolio is very short at this point of time. Fortunately, I didn't have as much money to pump in. Otherwise, I'd have put a good portion of my money into genomics. I have got ARK-G, and I suspect I have Verve, and I think I have DNA. So those are the stocks that I think I have in my portfolio, and they won't account for more than 15% in best case. But my biggest loss this year was Tesla. Tesla tanked a lot. I had Apple. Apple also went down. I had all the big names, Amazon. All of them have tanked. So people in genomics should not feel too bad because reputed companies have fallen big time. Billionaires have lost huge fortunes. So considering that, I think our red portfolio, if you have a red portfolio, is not going to be that bad. And we should look at what's going to happen next year. I have been doing even more reading, and the more I read about the economy, the more I get different ideas which are equally disturbing. I'll talk about some of the things that I heard from an ex-Fed official who was talking in an interview. I'll have a separate video for that before the end of the year if I could. That's a topic for another day. Right now, I'd like to end the session out here. I wish you all a very happy new year, and I hope your portfolio improves in the next year. It's always better to have a balanced portfolio. So maybe in the next year, we should resolve that we are not going to be swayed by the ups and downs of the market or the next shiny object. And we're going to focus on broad basing our portfolio, managing our risks, and being careful with purchase and sales. Thanks and have a great day. Bye for now.